How to apply multiple time frame trading method on the weekly chart. How to apply multiple time frame trading method on the weekly chart. We are on a weekly chart of Cathay Spade and Company. The epic is KATE. This is a Russell 1000 component. And we want to discuss how to apply multiple time frame trading method on weekly charts. Alright, so if you have been swing trading, alright, you have been probably using the daily chart and the weekly chart. So for the daily chart, I have already told traders when we are using a top-down trading strategy on the daily chart, we combine the daily chart, the hourly time frame, and the 50-minute time frame. If you want to know more, check out the video that we titled How to Swing Trade Daily Charts Using Top-Down Trading Strategies by 24 Stock Trader YouTube channel. Okay. Now it is time to share with traders how one can apply multiple time frame trading method on weekly chart. It's very important that those who are teaching traders, show traders exactly how to apply a multiple time frame trading method or a top-down trading method that will help us to have a viable financial market, an orderly financial market, so that we can all profit in the financial market. Because this subject of multiple time frame trading method is very hidden. It's like a privilege club. It's like a kind of a secret, but I do not see it like a secret. That's why we are recording this video today, to reveal to traders exactly how to apply multiple time frame trading method on the weekly chart. All right. So the first thing that we are looking for is a trading setup on the weekly chart. All right, but not any type of trading setup, because as a swing trader, you're going to remain in the market for 5 days or more, all right, 3 days at least, or 5 days or more. So you want to focus only on what we call high probability trading setup. So one example of a high probability trading setup is the first lower high after a double top, the first higher low after a double bottom chart pattern is a high probability trading setup. So if you have been following that for some time, I think I posted a video about the 5 high probability trading setup one should know at the 24 Stock Trader YouTube channel. So you can YouTube search that video, 5 high probability trading setup one should know, and you will see it. Okay. So, but there is another high probability trading setup that I like if I want to trade on the weekly chart, okay? That high probability trading setup is when a price forms a bullish chart pattern in the vicinity of the 50% Fibonacci retracement level. Let me explain myself, okay? So you can see here the stock went up from here where my cursor is, and it went up to this point here, and then the stock pulled back to the 50% Fibonacci retracement level. Can you see 50 here? It's not very clear. I try to zoom into it. Can you see 50? You see the 50% Fibonacci retracement level? That's the orange line on my chart. All right, now you see it. So one of my favorite high probability trading setup is when a price forms a bullish chart pattern in the vicinity of the 50% Fibonacci retracement level. So price went up from A to B and then pull back and form a double bottom chart pattern or a bullish chart pattern, base double bottom chart pattern at a 50% Fibonacci retracement level. So now that is a high probability trading setup. So that high probability trading setup is here where I'm placing my vertical line. So when we see a high probability trading setup, or when we identify a high probability trading setup on the weekly chart, We want to ascertain, we want to verify, we want to certify, we want to confirm that this is a valid trading setup. In order to do that, we need to go to a higher time frame. So you can go, because a higher time frame, it looks like there are some interference in my computer right now. A higher time frame to a weekly chart is the monthly chart, or a quarterly chart, or the yearly chart. So I'm going to go to the first and nearest higher time frame is the monthly chart. So I'm going to the monthly chart to see whether my trading setup is making sense. All right. So if you look carefully, I'm now on the monthly chart. Right from a double bottom chart pattern, we are here. See my vertical line from the weekly chart. What has happened? I want to ascertain whether my high probability trading setup, or my supposed to be high probability trading setup on the weekly time frame, is it still valid? Is it still making sense when we switch to the monthly chart? Sometimes you'll be surprised. You may look at something on a daily chart or weekly chart, it may look like bullish to you, but when you see the bigger picture, you go to a higher time frame, you will notice quickly that it is not, in fact, okay, a valid trading setup. Okay. So what is happening on the monthly chart? You can see that the stock went up for some time, for many years, and then it came down. Okay, well below the previous support level. So you can see that the 50% Fibonacci retracement level, which is the orange line, is corresponding to a support level on the monthly chart. You can see the price went down, blah, 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 to the orange line from a double bottom chart pattern here, and then went up. The same zone, the price found a support, pulled back, retested here. So the orange line, which is now the 50% Fibonacci retracement level of the price action from here to here on the weekly chart, is a strong support level on the monthly chart. It is good, because if I want to buy at a support level at least, or above a resistance level that is converted into a support level. So I'm happy that my 50% is corresponding to a support level. Not only that, you can see that the price was consolidating, you see, on the monthly chart. Can you see on the monthly chart? The price was consolidating, you see the consolidation, up, down, between this blue horizontal line and my orange line. Okay, so there is a kind of consolidation on this monthly chart, but now the price breaks above that consolidation and was retesting it now, but also forming a double bottom chart pattern above the consolidation. Well, I'm happy with my high probability trading setup on a weekly chart. After looking at the monthly chart, I'm happy that it is not a useless trading setup. This is about the validation of the trading setup on a higher time frame. If, for instance, I came to the monthly chart and it didn't make any sense and I couldn't see anything clearly, I may go to the quarterly chart. If it doesn't make sense again on the quarterly chart, I may go to the yearly chart. So now I'm satisfied with my trading setup. The next step, so first step, find a high probability trading setup. Second step, validate the trading setup. Third step, implement a top-down trading method. So when we are talking about a top-down trading method on the weekly chart, we want to combine the weekly chart and the 4-hour time frame and the 50-minute time frame. We can also combine the weekly chart, the 2-hour time frame, and the 50-minute time frame. So the trading setup is on the weekly chart, the signal is on the 4-hour time frame or 2-hour time frame, and the signal is always on the 50-minute time frame. This is about a top-down trading method on the weekly time frame. We find a high probability trading setup on the weekly time frame. We look on a higher time frame to validate the trading setup. Then we implement a top-down trading method combining the weekly chart, the 4-hour time frame, and the 50-minute time frame, or the weekly time frame, the 2-hour time frame, and the 50-minute time frame. All right? Is it clear? That's a top-down trading method on the weekly time frame. But as I told you before, you want to spend more time to find a high probability trading setup, a reliable trading setup, a trading setup that you understand, a trading setup that you master. Then you want to validate that trading setup, and then you implement a top-down trading method. There is another step that you must take, because if you just find a high probability trading setup and you just validate that trading setup and then you implement a top-down trading method, that's not bad. But it's not finished yet. That's the first step. So this is what is taught generally to many people. They just use technical analysis alone. The best approach is now to use what we call, the next step is to apply the trading triangle. Without a trading triangle, take it from me, one can go round, swing trading for a year without any success. All right? So when we are talking about the trading triangle, what I will do, I will refer our traders to YouTube. So YouTube search a video that we call the trading triangle by George Trio, or how to use the trading triangle like a pro. All right? When we are talking about the trading triangle, we want to pay attention to the S&P 500. Doesn't matter whether you are in Africa or anywhere in the world, or in United Kingdom or United States, in Asia, all right? Doesn't matter. S&P 500. All right? If you are trading currencies, you want to pay attention to the euro-dollar, which is the euro-dollar currency pair, which is the leading currency pair. But you want to pay attention also to the Dow Jones. If you are trading currencies, pay attention to the Dow Jones and pay attention to the euro-dollar, okay? The next thing you want to pay attention to is the sector to which the stock belongs to, the group. The stock belongs to the Russell 1000. So you want to check what's happening to the Russell 1000 index. So the market first, the S&P 500, or the euro, or the Dow Jones for those who are trading currencies, all right? Then you want to see the sector to which the stock belongs to, all right? The group to which the stock belongs to. Then before you consider even to trade a stock. So you will not trade any stock, any financial instrument, without paying attention to the market and the sector. So the market first, the sector, before the individual financial instrument. The reason is, if you want to trade this stock, you find a bullish trading setup like this, but the S&P 500 is bearish, you may decide not to trade it at all. All right? Or if you find a bullish trading setup, but the sector is bearish, you need to be careful. All right? So that's what we say, the market first, the sector before the individual financial instrument. But it's not finished here, because a lot of traders are technical traders. They do not pay attention to the market leaders, and they do not pay attention to the fundamentals and the economy news. The good news is that you will pay attention to the market leaders, you will pay attention to the fundamentals, and you will pay attention to the economy news. A swing trader who does not pay attention to the market leaders, the economy news, and the fundamentals will go round and round and round and round until one day it complies with the trading triangle. You can take it from me. Unless you have a lot of money you want to waste before you start doing things properly, it's up to you. Because swing trading, you want to remain in the market for 5 days or more. The economy news. So, for instance, you want to trade this stock, Cathay Spade Company, go to Google Finance, put the EPIC Cathay, all right? So here we are, let's try it. Okay, let's go to Google Finance, and let's see what's going to come up now. And you can see it's quite easy. And you want to know what's going on. Is there any litigation, any news holding on this company, all right? What's going on regarding Cathay? You will also see economy news relating to stock that belong to the same sector like Cathay. So we put the EPIC, okay, Kilo, Alpha, Tango, Eco. That's the name, all right? Here it is, Cathay. Bear with me 1 second. Cathay Spade, yes, that's correct. That's the name. So let's search again. Here it is, Cathay Spade and Co. That's the stock we are looking for, all right? Here it is. So now, what do you need to do? Click on news. Here it is, click on news. And just read economy news, you see, 6 hours ago. Okay, 1 month after Brexit, what we know about the economy. Okay, now, you will see economy news relating to this stock and other stocks that belong to his sector. All right, very simple. All right, just read through, spend time to do your due diligence, and then the next step after you do that, you click on the financials. Okay. All right, you click on the financial. I'm going to go back again to finance, and 1 second, please. We perform a Google Asset test. There is a video about Google Asset tests. All right. Here it is. You click on financials. Okay. Here it is. You click on the financial. You check the balance sheets. Here it is. Balance sheets. Annual data. Click on annual data. You want to perform Google Asset test. It's very, very important to perform at least Google Asset test. All right. As a swing trader, you want to know the economy news that can mess up your trade, all right? You want to know what is going on, what people are talking about that are concerning this stock, all right? And then you want to perform Google Asset test, check the fundamentals, before you even bother, okay, to buy or sell the stock. Sometime after doing the verification or applying, the top-down trading method or applying the trading triangle, you'll notice that it's not worthy to even attempt to buy the stock because nothing is going on. Suppose everything looks good, technically speaking, all right? Now you check the economy news, it's all bad news. And you check you perform Google Asset test, it failed to pass the Google Asset test, and you know that this company is struggling, they are not making any money. Will you bother to buy the stock and hold? Because there's no enthusiasm to buy the stock. The investors, the professional trader will not buy that stock. You want to buy stock that are liquid. Stock that are liquid are stock that the professional trading, the blue chips. So by checking the fundamentals and economy news carefully, you know that, okay, this is a good candidate, and then you want to trade it when the market environment is bullish or the sector is bullish. The trading triangle plus, the top-down trading method will help traders to swing trade on a weekly chart like a pro, combining the weekly charts, the 4-hour time frame and the 50-minute time frame, or the weekly chart, the 2-hour time frame, and the 15-minute time frame. So the signal on the signal time frame, which is the 2-hour time frame or the 4-hour time frame, may be probably breaking out of a bullish signal, maybe probably coming out of a bearish channel, coming out of the bearish channel and retesting it, or the price breaking above a prior high or break above a key resistance level, preferably a prior high, and retesting that resistance, break above, retest, forming, the first bullish candlestick. That's the signal, break above, retest, turn around. So on the signal time frame or out of a bearish channel, breakable, retest, first bullish candle, that's not yet the entry. Then we go to the 50-minute time frame. We look for similar scenario out of a bearish channel on a 50-minute time frame and retesting in the first bullish candle. Then we buy or break above a prior high, retesting the prior high, and the first bullish candle on a 50-minute time frame. Then we buy. On the day that you are about to buy, the market should be bullish. It shouldn't be on Friday. So if you are swing trading, don't buy or sell, place your swing trade on Fridays. It's crazy. It is stupid. All right. One more thing. If you want to swing trade like a pro, usually enter your trade on Tuesday. So some trader may say to me, I have to enter the trade on Tuesday because that's the best day to enter the trade. You do not have to. But the best day for entering a swing trade is Tuesday. All right? If the conditions are favorable. All right? That's how you will enter the trade on Tuesday, preferably. Because we want the first day of the week to come out first. All right? And then on Tuesday, usually by the end of the market on Tuesday, you will place your swing trade. All right? So you're going to hold your swing trade up to Friday, and sometimes you can hold it up to the following week. As always, if you learn something new for the first time, you want to practice until you master it. So the first step in this trading education is the accumulation of the knowledge and the assimilation of the knowledge. The next step is to go and practice with a demo account until you master it. But what we have noticed, traders will learn something, the theory, they have the knowledge, and they think that they can apply it straight away. But they do not have the skills and experience to swing trade like a pro. In order to have the skills and experience, one must use a demo account. Practice for some time, okay? You can go now on the football ground because you know you watch a lot of football games, so you can go now and start playing football with a professional. Just think of it. You're not going to play any football with a professional. Now, if you watch too many football games, or you are a football fan and you go to the stadium every Saturday watching your favorite team, all right, and now you want to play football, practice first. You want to practice. So the same thing people want to do when they want to swing trade or day trade. But generally people go on YouTube, they watch a video and they say, yes, I understand it, but when I put it into you, it didn't work. Okay, if it didn't work, okay, go back again to the drawing board, try again. Don't use real money first because you are not yet ready to compete with the professional traders. All right, so you don't want to lose. That's the bottom line. You don't want to lose at all. So you use your time to master it. If you can do it with a demo account, with a live chart, all right, live chart, use the real live chart. All right, so you have your demo account, but market is open. You sit down in front of your computer. You do it like a real money. Don't fool yourself, okay, when you are using a demo account. Think of it like a real money that you have, real situation, but use also real live data and then enter the trade and see whether your strategy is working or not. Once you are ready, you will be able to go out there and compete with a professional. Some traders have been doing this for years. So just by knowing that one can combine the weekly chart, the 4-hour time frame or the 2-hour time frame, the 50-minute time frame, those traders can quickly improve their swing trading because they have the skill and the experience, but they are lacking the knowledge. Now that we are giving the knowledge, those traders can go out now and perform better than before. Some traders that are struggling may also use this tutorial to polish their swing trading. But as a beginner, the next stage is now to practice until you master it. This is about how to apply multiple time frame trading method on a weekly chart. We are looking for a reliable trading setup, a high probability trading setup. Then we validate that trading setup on a higher time frame. Then we implement a top-down trading method by combining the weekly chart, the 2-hour time frame or the 4-hour time frame for the signal, and the 50-minute time frame for the entry. The next step is to use the trading triangle when we are paying attention to the market first, the S&P 500, the sector before the financial instrument that we are trading. We will not ignore the market leaders, the economy news, and the fundamental that can change, the dynamics of technical analysis. We must always have two watch lists, one bullish watch list, one bearish watch list, and we will deploy the bullish watch list if the market is bullish, and we will ignore the bearish watch list at the time when the market is bullish. We will not enter a swing trade on Tuesday. Correction. We will not enter a swing trade on Fridays. It's quite risky. It may work sometime, but it's quite risky to enter a swing trade on Friday. Personally, in my view, feel free to disagree, the best time to enter a swing trade is on Tuesday after the market is open or about to close on Tuesday. We can easily find higher probability. We can easily enter our swing trade peacefully without stress. Right? So if you have any question or suggestion, put in the comment section, and in due course, I will be recording another video to answer your specific question. In the next tutorial, I will be talking about how to implement a top-down trading strategy on a monthly chart. All right? When we are swing trading on a monthly chart, we will combine the monthly chart, the daily chart, and the hourly time frame. See you in the next video. We are the TSTW 24 traders talking about how to apply multiple time frames trading method on weekly chart. Happy trading to you all and speak to you soon.